Welcome, ladies and gentlemen. There's a lot more of you all of a sudden. I once again hope you all won't just up and leave because you realize I don't just make Middle English videos. And if you see this video and aren't subscribed yet, please consider doing so. It takes very little from you and it helps me out a great deal. Also consider leaving a like once you've actually watched this video. The stock market has been in the news a lot lately. Earlier today I released a video about short selling, explaining it in very simple terms. As a companion piece, here's a video about the concept of trading stocks. As with most aspects of modern finance, this is a very complicated topic when you get down to the nitty-gritty details, but I hope to be able to explain the general concept to you very clearly and simply. In this video I will explore how a regular person might get into stock trading, why they would do so, what the potential outcomes are, and how those outcomes come about. I will explain all of this with a simplified example. So here are our characters. Green is a regular investor. Grey is a stockbroker. Brown is a different regular investor. And the company we are looking at is called Onions and Shirts Incorporated. To keep things simple, our stock market has only 10 participants. Green has saved up a lot of money lately. His bank is giving him interest on it, but he feels like the rate is too low, so he takes some of the money he doesn't think he'll need on his bank account and decides to invest in the stock market. The reason why he leaves some of the money with the bank is because once the money is in the stock market, it would take Green a little while to get his money back to him if he ever needs it for an emergency. Now, because Green doesn't have the time to deal directly with all the regulations, paperwork and hassle at a stock exchange, he goes to a broker like Grey instead. There he opens a brokerage account, very similar to a bank account, and puts all of his money in. He then gets to tell his broker to buy shares for him. Shares, also called stocks, are, in simple terms, a very tiny part of a company. Green, for example, is very interested in the company Onions and Shirts Incorporated. He is a loyal customer of theirs and thinks they do very good business. So he tells his broker to buy a share of Onions and Shirts for him. All in all, Onions and Shirt ownership is split up into 1,000 tiny pieces. Not all of these pieces are currently owned by investors. Those that aren't are sitting at the stock exchange waiting to be bought. Since Green bought a share, he now owns 1/1000th of the Onions and Shirts company. Now, this doesn't mean he can just strut into a factory to grab an onion whenever he feels like it, though. But if the company makes profit, they might decide to split what they earned equally among all shares. This is called a dividend. Not every company gives it, but Onions and Shirts does. The way this works is if an Onions and Shirts made $1 million in one quarter, Green would get 1/1000th of that money. That's $1,000 earned every quarter year. Wow! That was one of the reasons why Green wanted to take his money to a broker. Note that this is a very fantastical example. Most dividends come out to less than $1 per share. It can still add up though if you buy a lot of shares. Now Green goes back to his day-to-day life. Occasionally he looks at the stock numbers on his phone or in the newspaper. At this point there are two possibilities. First option. The price for Onions and Shirts stocks increases after Green bought his. Second option. The price per share of Onions and Shirts decreases after Green bought his. Green hopes it increases, because that would mean he could sell his share and get more money from Gray than he spent getting it. But if the value of onions and shirts decreases, Green wouldn't be happy at all. Because then, if Green decides to sell his share, he would get less money back. But why do stocks even change value? The reason is all the other people who are also buying and selling in the stock market. For example, Brown here also bought some onions and shirts stock from Gray. But one day, Brown hears from somebody that Onions and Shirts has a plan to start selling tools. Brown doesn't think that's a good idea at all, because everybody knows onions and tools don't make sense together. So he decides to sell his stock to avoid what he thinks will be a business catastrophe. Now, because of how the market works and according to the law of supply and demand, when Brown decides to tell Gray to sell his share, the overall price to buy Onions and Shirts stock gets a bit smaller. If Green wants to sell his stock just after Brown sold his, he won't get as much money for it, but only a bit less. But what if many people agree with Brown? Suddenly the price drops a lot more, which may lead Green to panic and tell Gray to also sell his. He would make a loss from selling his stock. But what might cause stock prices to increase? The exact opposite. If Brown hears of the plan to start selling tools and he likes the idea, he might decide to tell Gray to buy a second stock because he thinks that selling tools will be good for the company's future. Then, again because of supply and demand, every other stock becomes a little bit more valuable. And if a lot of people want to buy Onions and Shirts, the stock might become a lot more valuable. If Green decides to tell Gray to sell his stock now, he would make a lot of money. He would make a profit from selling his stock. In reality, the big stock markets we have in our real world, a single person selling or buying stock has an even smaller effect than what I showed here. But all of the principles I've explained here is still the basic way the market works. This has been stock trading explained in simple terms. I hope you've enjoyed. This is not my usual content, but as I am fairly well educated in financial matters, I thought I'd explain the principles for people who are curious about how it works. This video was part of a double upload. Just a bit before this, I've uploaded a video explaining short selling. Please remember to leave any thoughts you have on this video in the form of a like, a dislike, or a comment below. A huge thank you to my only and first patron Saucer. Your support means a ton and really keeps me going making these videos. Thank you. Thank you for watching, and I'll see you around.